This is the third video in this series that will conclude in a detailed stock market trend forecast into January 2021. However, the whole of this analysis already first been made available to patrons who support my work. So do consider becoming a patron by supporting my work for just $3 per month, and also you'll gain access to my latest analysis, AI stocks portfolio buying levels for Q4 2020. Dow Short-term Trend Analysis. The stock market's recovery from the Chinese coronavirus catastrophe has been spectacular. Remember, the Dow traded down to a low of 18,213 on the 23rd of March 2020, and then over the next 6 months recovered to a high of 29,200, just 400 points shy of making a new all-time high. That is a spectacular bull run. So given that we have entered the weakest period of the year, October, and that there's an election on the 3rd of November, then the least surprising thing should be that the stock market has entered into a correction. In fact, the only surprising thing is that Dow did not start correcting earlier during October. Instead, it even tried to break towards new post-crash high mid-October, which was a little puzzling at the time, as it implied the market was discounting a Trump election victory that was invisible to most, including me. Nevertheless, it was ringing the alarm bells that Trump could even win. Why else is the stock market soaring? So clearly the stock market and the polls and betting markets are gyrating towards trying to divine the outcome of the US presidential election, where it looks like the stock market's early October was wrong, hence the recent plunge to recent lows. Maybe it was wishful thinking amongst Wall Street traders exposed to too much Fox News and thus started to believe the hype. Anyway, reality has now started to dawn on the market participants that Trump is not the favourite to win this election, hence this week's 900-point Dow nosedive. Dow long-term trend analysis. The stock market is having its first significant correction since the start of its bull run following the corona crash into March 2020. Failure to hold its support at 26,500 is eyeing a trend to the next support level at 25,000. Though MACD is oversold, so implies limited downside. Of course, price action is heavily influenced by election uncertainty. Trend analysis. The Dow came within a whisker of trading at a new all-time high in September before turning lower. This implies to expect significant correction, i.e. the Dow could retrace as much as 50% of the advance of the March low, though which at this point in time is a low probability outcome. Resistance. There is heavy overhead resistance at 29,000 to 29,400, which means it's going to take several assaults before a breakout to new all-time highs, likely this year. Support. Dow has broken immediate support at 26,500, below which is a support at 61.8% at 25,000, then 50% at 23,700. Trend lines. The Dow is gap below trend line support, so signals a change in trend. It looks like the bull run could be over for now, thus lower prices are more likely than not. MACD. The MACD has unwound its overbought state and is basically neutral, which means that any trend lower should be measured rather than severe. And finally, the VIX is spiking to levels in line with recent spikes, so suggests that further downside should be limited, i.e. we may have reached max volatility. And this stock market analysis is an excerpt from my latest in-depth analysis that concludes in a detailed stock market trend forecast into January 2021. So for immediate first access to all of my analysis and trend forecasts, then do consider becoming a patron by supporting my work for just $3 per month. And remember to subscribe to this YouTube video for new videos.